let's move on to Pioneer Foods. It's a food and beverage producer with a market cap of 13.1 billion rand, so larger than the two, Rainbow and Astral. It reported that earnings will be between 45% and 55% low, with the year earlier. The full year earnings are expected to be released in mid-May. Paul, if you strip out the fact that they've got that IFRS number that's coming into play as a result of that BEE transaction, the earnings are not going to be as bad if you strip out that, but still down on the year, and a lot of concern around the slowdown and constrained consumer spending and that impact.
Look, their competitor, the much bigger Tiger Brands, though, has done fine. Pioneer was an interesting company to me, came out of the kind of Western Cape co-ops. It was built as a group with an off-market presence. It listed not all that long ago, and when it did, it ran almost immediately into a terrible publicity disaster, which was their participation in a price-fixing racket to control the price of bread in the Western Cape. So that was almost, I would have thought, a real
disaster,
death blow to their status, but it didn't seem to trouble the market very long, because it listed at around 28 Rand a share, and here it is trading at 59. But it does have some very well-established brands, and it's done well to transition itself from the traditional food company into a branded goods foods company. So we know that they've got the Sasco brand in the bread market. They're in Weet-Bix and Bacomo and Marmite and all of that stuff. They also have the Ceres juices business, which is a very good business, and one where they've been able to, again, take a kind of commodity business and migrate it into the small little Tetra Pak boxes and sell them at a massive price. So they've done well. They also kind of booted out the board and got a new one, with the PSG people being more significantly involved when they decided finally to cave and do the mea culpa on the competition issue, because initially they said, "Ugh, no, what are you talking about?" So here we go, 14.5 billion company, looks fairly well priced. Andre Hanekom, the CEO, looks like a solid sort of a chap. I don't know. I mean, they certainly have their place on the restaurant horizon.
More of a brand company if you're looking at it, but still facing the same type of cost pressures. Maize prices are an issue, wheat prices are an issue, input cost overall are an issue. Also the same problems that that poultry producers face. So what are your thoughts on Pioneer?
It's devolving, as Paul said. There, from the low end of the market into value add. They've got some incredible brands. They are now moving into the north of the country. Traditionally, they've been strong in the south of the country, in places like the Cape. They are putting a lot into capex to get efficiencies, to get economies of scale. Unfortunately, those legacy problems have set them back in the short term. The more hands-on attitude we've seen with the new board, and certainly with PSG playing a more significant part, having BE credentials.
So with the new leadership, with this BE 13.5% ownership that is going to come into play now, would you be buying the stock? Almost 60 Rand, hasn't gone anywhere for some time, but stronger than that listing price.
Yes, on a 1 year to 2 year view, I think we're going to see the turnaround, particularly in the second half to September this year. The first half, we've seen the trading update doesn't look great. As cost pressures start to subside, so that will impact on widening of margins.
Would you be buying into this turnaround story and evolution?
Look, they love them. They obviously love them somewhere. These food companies have done exceedingly well, and I think it's partly because when global investors come down here and they look at the African investment story and the 800 billion people and all of that, they think the food way is a very safe way to be invested in that. So Tiger has done exceptionally well. Pioneer continues to do well. Pioneer's got that joint venture with Heinz, to manufacture tomato sauce and so on. So it's possible that a global player like Heinz, for example, might say, well, look, let's buy these guys as a bridge ahead into Africa and get started and get cracking.
And PSG will then make its return. Would you be buying
well,
the
they'd
stock?
Probably sell out at a massive profit. I would say you can never buy a stock on that kind of idea that there's M&A down the track. So again, I'm going to pass on this one. It wouldn't be one of my first tier picks.
Okay, so 3 knots and a hot for Pioneer with a 1 to 2 year investment horizon.
Yeah, I'm lukewarm in the short term, and in the longer term, I'm hot on that.